Right here we have two indicators that complement each other to produce super accurate buy and sell signals. For example, right here we had a pullback entry because the price pulled all the way back and touched the green trend ribbon with a wick. Now, to confirm that this signal is valid, we have to ensure that this oscillator is under the zero level, which, as we can see, it was. Looking at this trade, we can see it was indeed profitable. Now here we had another position. As you can see, the price did a pullback because it touched the trend ribbon with a wick. But looking at the bottom indicator, we can see that this oscillator was not below the zero level, which means this entry was not valid. And as you can see, this trade was not profitable. Now here is another trade where all the conditions were met. You can see we had a pullback which was confirmed by this oscillator being under the zero line, and it was a profitable trade. But as soon as one of the conditions is not met, like in this trade, chances are that this trade is not gonna be profitable. In this video, we're gonna go over what these two indicators are and how we can combine the two to generate super accurate buy and sell signals. Let's get into it. Now, to get started with this strategy, you want to go to TradingView and then open any trading security that you like in any time frame. For me, I'm going to be using the 1 hour time frame of AUD CAD. Next, you want to click on indicators and type in Adaptive Kalman, and you're going to select two indicators. The first one is this one called Adaptive Kalman Filter by Zierman, and the second one is this one called Adaptive Kalman Trend Filter, also created by Zierman. These two indicators are related. You can even consider them siblings of each other. The one at the top is the Adaptive Kalman Trend Filter. It adapts to market volatility and momentum, meaning it changes how it behaves based on current market conditions. Its main purpose is to give clear trend direction without unnecessary noise, so you can see exactly what's happening with the trend of the market. The one at the bottom is the Kalman Trend Strength Oscillator. If I hide the one at the top, you can see that this oscillator also overlays a trend ribbon that is basically a mirror of itself onto your chart. This oscillator also adapts to market volatility and momentum, but it focuses on showing both the trend direction and the strength of the trend. So basically, the indicator at the bottom has the Kalman Trend Strength Oscillator, which is this line that changes color between green and red. Looking closely, you can see there is a third color, blue. This indicates instances in the market where a trend reversal or a pullback may be happening. For example, when the oscillator is above the zero level, that indicates a bullish trend. But then, as soon as it comes back down for a bit and changes its color to blue and then back to green, that would be a potential pullback, and it's a signal that the price may continue going upwards. You can see the same is reflected on the overlaid trend ribbon. It's basically a mirror of this oscillator. The opposite of this is true for when the oscillator is below the zero level. It would indicate that the trend is bearish, but during these bearish trends, pullbacks will occur. We confirm these pullbacks by looking for instances where the oscillator turns blue, like here. This is a pullback within a bearish trend. Now, this table down here is used to indicate the strength of the trend, whether bullish or bearish. If it's colored red, it indicates that the trend is bearish, and the percentage value represents the strength of the trend. Typically, when using this indicator to trade, you want this number to be as high as possible to indicate the strongest possible trend. Now, this indicator at the top does a similar job to the one at the bottom, only better. Looking at the settings, we have an option called Volatility Adjusted Bands. If we enable that and set its length, and then set the band sigma to 200, you can see we have a band that envelopes the price, and it also changes its thickness based on volatility. As you can see here, there was increased volatility, and the band became thicker to reflect the increased volatility. This can actually be used to trade based on volatility breakouts. In a bullish trend, which is indicated by this indicator using a green trend ribbon, whenever the price breaks above the upper section of this band, that would indicate a bullish volatility breakout, which is an opportunity for you to take long positions. Conversely, in a bearish trend, which is indicated by a red trend ribbon, whenever the price breaks below this band, that is a bearish volatility breakout, and it would indicate that the bearish trend of the market is strong enough to push the price down. Whenever this happens, you may want to start looking for short positions. Now, if we disable the volatility bands, we're going to be left with the sigma band, which is this cloud right here, and it's going to be used for identifying trends in the market. This indicator also shows the strength of the trend using this table. The trend strength table provides a visual representation of the current strength of the market as a percentage based on oscillator calculations from the Kalman filter. This table divides the trend strength into color-coded segments, helping you to quickly assess whether the market is strongly trending or nearing a reversal. A high trend strength percentage indicates a strong trend, while a lower percentage suggests weakening momentum or a consolidation. A practical way of using the trend strength in the markets is as simple as this. In a bullish trend, the price is most likely going to be trading above the sigma band, but during a pullback, which is indicated by the price coming back down and touching this trend ribbon with a wick, you want to take a look at the trend strength value, and it should be at least 80%. Such a high trend strength within a pullback indicates that the price is most likely going to continue going upwards, which tells you that taking a long position here is probably a good idea. In a bearish market, like here, the price is most likely going to be trading under the trend ribbon. Whenever a pullback happens, that is, the price comes back up and touches this trend ribbon only with a wick, you want to ensure that the trend strength value is at least minus 80% before you take your short positions. Now, looking at this indicator, you can see that there is this vertical bar, and you may be thinking, what exactly is it? Well, this is called a trend range. It's a section that evaluates the market's directional movement over a specified look-back period, highlighting areas where price oscillations indicate a trend. This calculation assesses how prices vary within the range, offering an indication of trend stability or the likelihood of trend reversals. So you basically double-click on it, and then you can see we have a default value of 14. That means that this indicator is going to look over the past 14 candles and see if the overall trend over those candles was bullish or bearish. If it was bullish, then the trend range is going to be colored mostly green. But if it was bearish, it's going to be colored mostly red. And of course, if you want to capture longer-term trends in the market, you can change this number to something like 100. So you're basically going to be evaluating the trend over the past 100 candles. As you can see, changing this number also changes the calculations of the trend range. Also, I don't like this bright color, so I'm going to change it to a normal green color. Now, these two indicators are super effective when used on their own, but imagine what would happen if we were to combine the two into a single strategy. Well, you don't have to imagine anymore, because that's exactly what I did. The purpose of this video is to show you the conditions for taking buy and sell entries based on these two indicators. Now, before we go over the conditions for taking a long trade, let me show you the settings I'm going to be using. Everything else remains the same, except I'm going to be changing the trend range to 100, but the trend strength remains at 5. The volatility adjusted bands are going to be disabled, and the band sigma should have a length of 50. I also changed the bright green color to a normal green color for both instances, and I also changed the blue color to orange. For the bottom indicator, I'm going to disable the Adaptive Kalman filter. After that, I'll change the color of the zero line to white and set the display style to a solid line. Once these changes are made, click OK. Now, to take a long trade, the trend of the market should be bullish, indicated by a green trend ribbon with the price trading above it. Now, you also need to ensure that the trend range is more green than red, showing that over the last 100 candles, the market has been bullish. Next, you want to look for a market pullback, confirmed by the price touching the green ribbon only with a wick. It shouldn't close under the ribbon. If it closes under it, the entry becomes invalid. We have the pullback here. Now, during the pullback, you want to check the Kalman Trend Strength Oscillator. It should be under the 0 level to confirm the pullback. Also, look at the trend strength gauge. It needs to indicate at least 80%. Here we can see it's well above 80%, meaning the trend is strong enough to push the price up. Now, before entering the trade, you want to let the market play out until the Kalman Trend Strength Oscillator, this red line, breaks and closes above the 0 level. Here, it just broke and closed above the 0 level, so we take a long position. We're gonna put the stop loss leveled with the green trend ribbon, targeting 1 to 1.5 risk-reward ratio, letting the trade run, And as you can see, ladies and gentlemen, the trade was profitable. For a short position, we're gonna do the opposite. Right here we can see that the trend of the market is bearish. How do we know it's bearish? Well, it's because this tiny trend ribbon is red and the price is trading under it. Also, looking at the trend range, it indicates that over the last 100 candles, the market has mostly been bearish. Looking at the chart, we can see that we have a pullback because this candle touched the trend ribbon only with a wick. Now remember, if it closes above the ribbon, the entry becomes invalid. Now, during this pullback, we can also see that the trend strength gauge indicated 80%, which is what we're looking for. It basically means that the trend is strong enough to push the price down. For our next condition, we're going to shift our attention to the Kalman Trend Oscillator. During this pullback, we need this oscillator to be above the zero level. Now, to confirm the end of the pullback, we're going to wait for the same oscillator to go back under the zero level. Right here, we can see that it's back under the zero level, which confirms the end of the pullback. We take a short position here, put the stop loss leveled with the red trend ribbon, targeting a 1 to 1.5 risk-reward ratio, letting the trade run, and as you can see, the trade was profitable. Ladies and gentlemen, these two indicators were developed by the same developer, Zierman, and I consider them siblings because they closely monitor the trend of the market and adapt based on momentum and volatility. The ability to judge a trend based on strength is what makes this strategy so much better. Now remember, this video is not financial advice, and this strategy is not foolproof. Do your own due diligence before investing with anything. That's been it for this video. I hope you found some value. If you did, remember to leave a like or even consider subscribing to stay tuned. Thanks for watching. See you next time.